He's head of equities, PMS, Motilal Oswal Asset Management Company. Motilal, of course, is one of the mutual funds which has got a popular NASDAQ ETF. Just talking about that with Harold. Manish, good morning. Great to have you with us here on the program. Just your thoughts on the market itself. We're now about a week and a half away from the budget. So I guess we have that to contend with. But how are you feeling about things? We got a brief bout of underperformance relative to the globe. Is that getting behind now?
Yeah, China is being bought into, and India not so much of an inflows into the new year. I think the key point to note out here is that ever since the Fed has articulated that the Fed funds rate can top 5%, it clearly means that there does not seem to be too much of an upside in India for the immediate term. Of course, second half of the year, you'll be looking to cross that 20,000 on the Nifty. But I would say at the current moment, there's not too much of a downside. There's not too much of an upside. It's going to be, pretty sideways market for the time.
Okay, a pretty sideways market. But within this range-bound market, Manish, there are plenty of pockets that are outperforming. IT has started to perform in a big way. And as we speak, Persistent Systems is up almost 4%. Tata Elxsi is rising ahead of its numbers. Do you like any of these names? If yes, which ones?
So technology has gone through a time correction as well as price correction. But even after, the fact that the recession commentary has been there for the last 11, 12 months, we actually have seen top-line numbers come for most of the IT companies that have reported so far. And so top-line growth estimates have been met. Margin numbers have been met, and valuations have corrected. So in that backdrop, it seems like that technology is bottoming out. And 2 quarters down the line, we'll all be looking at FY25 numbers. So it's not going to be only FY24, it's FY25. In that backdrop, wherever there's valuation comfort, whichever stock is not overtly overvalued, so to speak, is likely to outperform. Very difficult to say whether they will make absolute returns, but relatively technology is going to be an outperforming sector. On the back of turnover numbers having got met even in a weak quarter, furloughs, etc., margin numbers have been met. And the outlook for 25 seems to be better than FY24, where all the low growth estimates have got priced. So, within the large pack, we do have liking for companies which are there in the mid-teens. Even the large cap names like TCS and Infosys, some allocations to be made there.
All right. Hi, Manish. I think you guys were positive on Zomato earlier, yeah. And, the stock gave a good bounce. But suddenly that supply has again hit the screen. You believe that Zomato still is good from a longer term? And any other of these new age themes you'll have got into? Because quite a bit of selling has come about, be it a Nykaa, be it a Paytm.
See, Zomato, I think we're quite positive on Zomato. It does not really matter who is selling or who is buying, as long as there's fundamental value in a particular company, it will find capital. So at 50 rupees or even at 60 rupees, we think that most of the negatives that were pertaining to the stock, when it comes to overvaluation, all got factored in. The key thing to note out is whether 16.8 crore orders, which was the run rate of orders last quarter, whether that run rate is getting met. That is to say 70 crore orders annualized is coming about or not. And whether contribution margin of 17 rupees per order, whether that is increasing or not. And I think from a next 3 years perspective, the 70 crore orders would likely be closer to 150 crore orders. And the contribution margin of 17 rupees per order is closer to be around 25. In that backdrop, given the valuations of sub 50,000 crore or thereabouts market cap, with 11,000 odd crores of cash in the books, I think there's ample value in Zomato. It's now bordering value stock rather than a growth stock. And so from that perspective, clearly are positive from Zomato, even if, let's say, Alibaba has sold some stake. So this name is clearly something which we are liking. We're also working with Paytm now. I know, we are still doing our maths out there, our numbers, but clearly again, there you have Alibaba selling quite a bit. And after that 75% being a platform technology company and still having a revenue model with, bulk of the expenditure, having been taken care of. I think the growth can be quite non-linear, even in the case of Paytm. So within the new age companies, I think we are working with Paytm and Zomato, and we like both these stocks. In my portfolio, I specifically have Zomato. I'm doing some more work on it.
All right, Manish, thanks very much. Good speaking with you. Appreciate you joining in with that perspective. So that's Manish on markets, and he likes Zomato.